Hello there, my friends. Chris Marcus here with you for another edition of Inside the Markets on the StockPulse Network. And today, fortunate to be joined by one of my favorite guests these days. Also proud to call him a friend now that I've gotten to know him over the past couple months, which is, of course, Bill Murphy of GATA, one of the, in my opinion, leading figures in the silver market, who not only analyzes silver, but also has discovered really what was once a secret for a long time, and had the courage to stand up and speak up about that, because I do believe actually I don't have to say I believe there's inappropriate behavior in the market, because as we'll get Bill's opinion on, we now have another latest courtroom confession. So Bill, how are you today, my friend, and how is everything going?
Good to talk to you, Chris. Thanks for having me. And life's great, and the gold and silver markets are at least giving us some sunshine lately, but they got a long way to go to make me happy on those counts.
Well, I share that sentiment, and while we haven't seen the movement in the price just yet, at least something that I hope you feel proud of, in some sense, maybe not the ideal type of thing we want to feel proud of, but also relevant to investors that have been confused about the market. We've heard a lot about manipulation. We've heard a lot about JP Morgan. You've been one of the people early on speaking and writing about that. And sure enough, last week we did have a former JP Morgan trader not only plead guilty to market manipulation, whether they got to actual heart of the manipulation, maybe another story, yet also saying that the behavior was done with knowledge of his superiors, and that it appeared to be a widespread practice within the firm, which I won't make you say it, I'll say it for you, that really vindicates the core of the premise you've been laying out for so long. So with that said, anything you want to touch and add to that? I think it's a big story. And again, I hope just for you, it feels good that now there's no longer conspiracy theory, but it's in the courtroom.
Well, yeah, it's good to see. I mean, we've been at this 20 years now, myself and Chris Powell, my colleague, and it's been so obvious to us what's been going on. We've held 4 international conferences to lay it out for people and go into the press and Congress and all that stuff. So it's just the tip of the iceberg, really, what they're doing. And nobody should be surprised about JP Morgan. Over a 3.5-year period, they were fined $35 billion for rigging something like 7, 8, 9 markets. This stuff is all on the record, and people can read it on the internet. So what's the big surprise that they're rigging the gold and silver markets and have been in there? I mean, this is what they do. And especially in silver, we've been talking about it for year after year after year. They've driven up the open interest on the COMEX, which is the paper trading in silver, to force the price down, and they've been relentless on it, and they're still at it. So we're just hoping that more and more people get to realize what's going on and take up all the physical silver they can, and just to force these guys to retreat and, quite frankly, blow up their positions. And maybe that's too much of a hope trade, but I see it coming at some point down the road, because we've discussed, I mean, silver is the cheapest asset in the world, and there's no way it should be down at these pitiful price levels.
Right. And one thing to keep in mind that I haven't heard many mention, but obviously when something goes on this long, it's easy to wonder if it will ever happen. Although I'm sure you remember the London whale trade that was part of JP Morgan's group, where they had that credit index, I think it was back in 2011, and they had a position that was perhaps bigger than was ideal, and they did get squeezed out of it. Now, whether that's how this ultimately ends up playing out, just curious if you have any thoughts on that. I know you have a trading background as well. And maybe you touch on perhaps how it played out in 1980, and if you see any similarities, because it seems like we're reaching or nearing, or at least have to be heading to that point where someone shows up and there's enough demand for physical that it's just not there to back all of the paper that's been written at this point.
Well, it can happen at any time. And the question is whether people are scared of silver because of what happened to the Hunts, and how they shut them down and wouldn't allow any new buying. I mean, it was a joke what happened to them. But what I concentrate in the silver market is the open interest. When it went to $50 an ounce in 2011, the open interest until the very end was like 133,000 contracts on the COMEX, where they trade the paper markets, all the way up, 133,000 contracts. Well, now it's 225,000 contracts at these lower price levels. And normally in the futures markets, which you probably are aware of, Chris, is that the open interest dwindles as the price goes down and the speculators leave. They have no interest. There's no hedging. People just go away. Instead, in silver, it's gone bonkers, and it's been this way for a couple of years. So they are relentless to try to keep the price under control so you don't have one of these spike moves like you can get in certain markets if they lose control. If, for example, if there's a panic all of a sudden to buy silver and it's not there. And that's what I see coming at some point down the road here, and that's what I'm playing for.
And I think you just answered this, but just to make it clear for myself and the folks watching who have asked or maybe new to the silver manipulation, the feeling I've always had is that, again, you have all this paper out there that, you know, as long as you can keep writing paper and don't have to deliver the physical, schemes like this can go on for a while. Yet at some point, I mean, we hear a lot about the industrial demand for silver. Keith Neumeyer in an interview was mentioning that according to the Silver Institute numbers, that each year they're running a deficit. So I've always felt that if that continues, and then especially if you do have something that sparks the investment demand, that at some point, you know, if we don't have hope for the regulators or otherwise, that at some point someone shows up for the metal and it isn't there, which would lead to a short squeeze because you have all that open interest and the short paper. Am I getting that right? Is there anything that maybe you'd adjust or in the phrasing of that, or is that a fair assessment of the basic premise of what you're seeing would almost have to happen?
Well, that's exactly it. And it doesn't have to play out that way. I mean, you could have all of a sudden a JP Morgan want to get out and just cover their short positions, and you see the open interest collapse. But at this point, you know, with open interest, it just never goes down. I mean, it just stays way up there. And what they've done is what you got into. They've kept the price action so bad for so long at such poor price levels that they've destroyed a lot of the investor interest in the West. I mean, people just, you know, what's the point of being in silver? Look at it. It never goes up. It just stays down there. All these rallies are sold. And at some point, something's liable to happen, especially in the you know, industrial side of this, where all of a sudden it's needed and people go to get it. And when it's not there, the price goes nuts. Now, for me, and I could be wrong in this, of course, but the key is $21 silver. Years ago when they had a Brexit issue, again, as they're starting to have now, that's where the price of silver got to. It's been gone down ever since. I think if it can take $21 silver out, that you could see it move towards $100 faster than most people can imagine.
And I tend to agree with that. Again, we saw in 2011 how quickly the market can move, which certainly for folks who are saying, all right, maybe the supply and demand isn't changing that quickly, which is exactly the point. The market is not responding to supply and demand. It's responding to the way the paper contracts are being positioned. So I've been of that thought and agree with you that wherever that break point is, you know, once you have a short squeeze, then things move quickly. And along those lines, I guess, as I mentioned before, hearing about that deficit, that's something I've been wondering where, I guess early on when I started digging into gold and silver, there was something about the numbers that just didn't add up. And again, you know, the World Gold Council, with all due respect, my current belief is I take the numbers with a grain of salt. I know some have different interpretations of the Silver Institute numbers, but what is your take? Is there a yearly deficit? Is that an accurate way of phrasing it? And if so, where is that silver coming from?
Well, you know, it's a good question. And, you know, I've talked to a bunch of smart people about this that know more about the physical market. and I can't. They're having a tough time figuring it out. And all I can say is what I do know is where I got started in this thing 20 years ago is in the gold market. That a lot of the gold is gone, and how we know that is it's been leased out by these central banks, to bullion dealers to suppress the price, and that's what I'm most sure about, in the sense of at some point there could be a reckoning there too, as in silver. And when a lot of people go to get the gold that they think they have and it's not there. And recently we just had this story about Venezuela not being to get their gold back from the Bank of England. And they gave some ridiculous excuse why. And a bunch of our colleagues have been saying how tight the gold market is in London for a year or two now. And quite frankly, it hasn't been a thing. And you've had to wonder by the price action what they're talking about. Well, now that you've had this announcement that somebody can't get their gold back, it may just be because they're afraid to give out any more gold because it's not there, for people to get in the size that they need in terms of its major. So it's something to keep in mind, because I am sure that the central banks have nowhere near the physical gold they say they have. We've never had an audit in the United States since, I don't know, that's what they say, 1955. And nobody really knows what gold even the U.S. has. We've tried to get all kinds of answers, and we can't get them from anybody.
Yeah, you actually beat me to it. That was my next question down there. I had to hear your take on Venezuela. I was stunned. Fortunately, your website, GATA, was where I first heard of that. So again, folks who are invested in gold or want to know more about gold, which given today's economic environment, I think is wise to do. So again, another reason to go to GATA, and also the Metropole Cafe, where Bill does some writing, because then you can find out about these things before mainstream picks it up. And yeah, you had that story posted. I was stunned to see the Venezuela that they asked for their gold. The Bank of London, I think, at least according to the unnamed sources, said they're worried that Maduro is going to take the gold and sell it for his own personal gain. I've heard folks in the gold and silver community who suggest some of the folks running the U.S. at various points may have done that with Fort Knox gold, whether that's accurate or not. But just the idea that you can have speculation and say, we're not giving you the gold back. A, would that not qualify as a default in the gold market? And B, it was only 14 tons. So I wonder if there's more to the story than is being reported. And also if that's the case, and if they're really having trouble sourcing 14 tons of gold, then perhaps anything you could comment on, if that is accurate, how tight the actual conditions in the market are at this point.
Well, something doesn't mean anything till it does. It's a kind of a corny expression, but it's true. And what I was saying, our colleagues have been telling us about the tightness in London, the gold was leaving there and so on. And as they said, it didn't mean a thing. And all of a sudden you get this one story and you go, holy mackerel. Maybe now we've reached that tipping point in which it does mean something, and we're leading up to something spectacular. I've been talking lately about these gold pops, and we had another one today, and we've had 3 of them now, spikes out of nowhere in a month. And of course, then the gold cartel, as I call it, they calm the thing down. But it could be like tremors before an earthquake, that these things are starting to build. The tremors are starting to build. We had one in silver, and 3% moved to the upside, and they killed that. But
right.
It's happening more and more. And the story, as you're talking about, out of the Bank of England regarding Venezuela's gold, it's ludicrous. And anybody who knows anything just about anything can say how silly it is. And it could really be something extremely important. We don't know yet, but I have a feeling we're getting closer and closer to when the gold and silver are going to take off.
Yeah, which leads me to, I'm going to throw you a bit of an unfair question here, but if there's anyone who can come up with a good answer, I think you're the one. In 1980, we saw the silver spike up to $50. In 2011, I think the actual top was 49. I don't think it actually hit 50. And one of the questions I recently received from a reader was saying, well, how do you know when to sell your gold or silver? We'll stick with silver for this example. And again, you could comment, I was 2 years old in 1980, so I didn't catch too much of that one. But for me, I was sitting on a trading floor in, I guess it was late 2010. I remember in our morning notes seeing that QE2 was probably coming. I actually bought a 1,000-ounce silver block in response. It was clear what was happening with the money printing. And my take was that the reason silver was rising so rapidly was for legitimate reasons. People saw what was happening, responded by buying precious metals, which I feel, again, looking at my own behavior, was a driver in demand. Now, I know some people suggest, well, wasn't it manipulated on the way up? Which at this point, given how much manipulation there is in our markets, I can't rule anything out. Yet what it leaves us with is, let's say, we have a short squeeze and silver hits 50 again. I think a lot of people wonder, do I sell and cash out? Do I leave it? And again, there's a school of thought, well, if the dollar, when it finally reaches its break point, there's a point in which you don't want to sell silver to go back into dollars. So anything you could touch on from your experience in those two times it hit 50 and how you might handle that when it happens the next time?
Well, my strength is getting in early. It's never been getting out. That's been my biggest trading mistake ever.
Right.
Hang on. And I know, as I said, we had a conference in London in 2011. It was spectacular, and never dreamed, that the prices of silver and gold would come back down. But quite frankly, as I mentioned earlier about this open interest, I think J.P. Morgan got out of, Ted Butler talks about taking over positions from Bear Stearns and so on, and the open interest was 163,000. So it went down to 133,000. I think J.P. Morgan basically got out, and I heard this afterwards, that J.P. Morgan let the price go up to $49 and change, and was buying physical silver all the way up. And then getting near the top, they started selling the derivatives, the paper contracts, in 2 or 3 or 4 times the size of the physical stuff that they had. So they were massively short. And then they had physical silver to bomb the market. And they've been doing it ever since. And they've been trading on the short side since 2011 and made a fortune doing it. And they're still at it. So I think, to answer your question, we go back up again. There's an old adage about getting through, double tops, and triple tops don't stay that much. I think if you get above 50 this time, because of what people will be thinking, that's when it goes to 100 very quickly.
Right. So perhaps unfair question number 2 to tack onto that. Let's say we actually had a freely trading silver market that went on supply and demand. What do you think is a fair value for silver based on, forget about what the Fed might do in the future, but just based on, if you kept all conditions as is today, money supply as it is today, whatever that actually is, what would you say if you just removed the manipulation and didn't change anything else? What would your guess be of a fair, or maybe I could even get you to give me a bid and an offer. Maybe it's a wide market, but what's a reasonable fair value?
Well, I'm going to go back to what I've been chatting about, in the sense that I'm looking for silver to go to 100, and in the not too distant future, once it breaks 21. So if you would say to me, what's the fair price, what you just did, I would say at least $100 an ounce. There's other people that have much higher numbers, and that could very well be when things really explode. But that's only double what it was 38 years ago at one point. So that's what I'm looking for, and that's how I'm positioning what I'm doing in the silver arena, because that's the kind of price I expect to see.
Yeah, and if you people just want a simple way to look at it, if you imagine silver is just a piece of metal that sits there, it's being priced in dollars, and if more dollars are created, it's a simple fraction. The value of silver theoretically would go up as the fraction is adjusted. And if people actually did a presentation where I put the US debt chart in there, and it's stunning. I mean, again, there's always been the borrowing and the money printing, but really the way it's just accelerated and spiked up in the last 20 years in particular, and would seem that just from the money supply alone, again, we hear Mark Skidmore talk about $21 trillion of missing money, which makes you wonder what else is out there that we haven't found out about yet. So certainly to me, and love to hear your comment, it seems like there's just based on that, you can make a case that yes, if you have a spiking silver price, that should almost be expected based on what's happened with the money supply.
Well, that's a good point, and that's one of my gripes is why the manipulation has been so obvious these past many years. You're talking about debt, you're talking about budget deficits. We had zero interest rates, and gold and silver just went down and down and down. I mean, and that's because of what I call this gold cartel. So I'm a big fan of Newton's law of equal and opposite reactions, and the reaction on the downside has been egregious. It's been, forced. They've created artificially low prices. So when this thing starts to unravel, that's when I think you're going to get these kind of spikes on the upside, and the upside reaction is going to be equal to how bad it has been these past 7 years on the downside. And I think it's going to surprise a lot of people, and it's just human nature. They've been weak so long compared to other assets which have soared. A lot of people have just given up, and I think they're going to feel, very badly down the road because if they've done so.
Yeah, although it certainly seems like the conditions are in place to make even the crypto fans jealous based on what would seemingly be a mathematical likelihood at this point. And perhaps in wrapping up, last question, again, I was a little young for the 1980 spike, but I love hearing the history behind, and that's one of the things I love about gold and silver, that all the time we sit there waiting for prices to correct, gives us time to dig into the fascinating history. So perhaps anything you remember that stood out to you about the 1980 spike that perhaps the younger folks like myself might not be aware of that you'd like to share?
Well, I remember, and was trading commodities at the time, and back then it was the floor traders, and it wasn't all the computer trading as it is now. People go in, silver would get bid, no offer. Go limit up as they go up a certain amount. Next day, bids come in, silver go limit up.
Yep.
Day after day after day. And then the government came in and forced them out, in my opinion, and the Hunts and their followers illegally. And they crashed the market and created chaos for the Hunt family. And I think that's what's had people scared about silver ever since, because, the government, we take on the government in the markets, you've got a big problem. But I think that they said this has gone on so long that we're going to have reminiscences of what the kind of trade action we had during the Hunts. And as you just mentioned, even in terms of what silver could trade like the cryptos did a couple of years ago. And where a Bitcoin went from dollars to 1,000, and the next thing you know, in a year it's 19,000. It's under pressure now, and who knows what that's going to do? And that's not my thing. But going back in history, I think you can see a silver trade like Bitcoin once it breaks out to the upside above 21.
Yeah, especially if again, we talked about before leaving conditions equal, yet certainly if this is happening in combination with further infrastructure like petro yuans and foreign partners walking away from the dollar, it certainly should be fascinating, and perhaps sounds like there's a great book in there for you one day, Bill, just writing down all these things you've lived through. But at least until we get around to that, perhaps you could just, in wrapping up, share how people can find you. Again, you really do some great research that, for the folks who have been listening, they've been able to stay ahead of this. And so if you can let everybody know how they can find your research.
Sure. My colleague, Chris Powell, does great work for Gada.org. They can just look that up, www.gada.org, and get on his mailing list, and that doesn't cost anything. And then I have a commentary at metropolecafe.com, which I've been doing for 20 years, and I write about the gold markets, and there's a lot of other people on there, gold and silver markets and financial markets, and love what I do, and I can't wait off to sail off into the sunset as gold and silver head towards the moon. That's my goal.
Well, hopefully with this latest news from about JP Morgan and Venezuela and the other wacky things that are happening, hopefully it won't be too much longer. But again, I'm excited, if nothing else, at least any folks who still trying to say it's conspiracy theory. Now I think it's great that your work, not like you needed vindication, but now you were one of the first people I thought of when I saw that story. And certainly as someone who's been studying and learning about the market, I'm grateful for all that you put out there. And I'm grateful for you joining me on the show today. And we'll look forward to checking in with you again soon. Hopefully when silver's over $50.
Well, I'll be the most smiling guy you ever had on your commentary, if that's the case.
Well, I'll be looking forward to that, Bill. Thanks again, and I will talk to you soon, my friend.
Thanks, Bill. All the best.